What's up, guys? Rico here. Welcome back to Chibind Brothers. I know this is big, so let's just start right here. Fed stepped in with emergency funds, say all SVB deposits to be available Monday. I know this is big, but the point of this video and what I'm about to show you is that it's something that no one is actually talking about. No one is even paying attention to that, or at least it's not really a narrative that no one is even trying to bring up. And that's the most important part that anybody, or at least everyone who's been watching this or concerned, should be able to know. And I'm gonna bring it up to your attention. So just really quick, let's go through this. I'll show you exactly what I mean. Right? If we go down here really fast, you say, today we are taking decisive actions to protect the U.S. economy by strengthening public confidence in our banking system. A joint statement from the Treasury and the Fed and the FDIC said, the Fed will create a new bank term funding program to provide loans to banks. The Treasury is providing up to $25 billion from its exchange stabilization fund as a backstop, while the Fed will also ease rules as at its discount window where banks go to borrow. This is huge. Great. Remember when they told us that over the weekend they were going to try and auction all Silicon Valley Bank assets and found basically a new owner, and they want to come up with a solution by Monday? But that didn't happen. No one is actually even mentioning that. Why? I'm wondering, did nobody was able to place a bid big enough to get it? Or some of the other guys that could have been able to buy it? Apologize for that, my camera just went crazy. But anyway, some of the other guys that could have been able to purchase these assets, maybe they were just like, slow down, we have enough problems for now, and so maybe you might want to look into it yourself. But I'm going to show you why I'm saying this. I'll show you some data, and then you can make a decision for yourself. And so this was creating a major panic. One of the things, if you look here, the next bank that over the weekend everybody was pretty much pointing out that it's probably the next in line to have issues because there were so many people going out to all the branches trying to withdraw the money, which is First Republic Bank. It was the same. And so I'm sure over the weekend, the Federal Reserve, Treasury, and I'm pretty sure Jerome Powell did not sleep, because they know when a bank run happened and there is no solution over the weekend, like they thought they were going to be auctioning this thing out. And if they come up on Monday and say, sorry guys, it didn't really work out, we didn't find a buyer yet, it was gonna send a ripple effect all over. And we were going to see probably more bank run because everybody else that were exposed to it, or at least not only the companies or anyone else, but even just individual that would just want to get their money out. And I will tell you why most of these companies don't actually have liquidity, or they are short on liquid. But obviously some of them, like Silicon Valley, did have assets over $209 billion, right? And so this is a bailout. But the next bank, as this is happening, today, regulators close Signature Bank, his second shattered by Fed after Silicon Valley disaster. This is crazy. I mean, if you look over the entire article, man, this is the second bank in less than 3 days getting closed or shut down by the FDIC. Now, the crazy part is if the government is going to step in, basically the Fed or the Federal Reserve is going to step in to try, it's basically a bailout, even though they don't want to call it a bailout. It's literally a bailout in one way or another. Probably not bailing out the executive, but they're trying to find a ways to have money available for the people that had deposited. Right? That means they are putting out a facility that would have money available for these banks. So if you do that for Silicon Valley banks, you gotta do it for Signature Bank. Because here's the next thing. Coinbase had $240 billion cash balance at Signature Bank that just got closed down a few hours ago. But this is what they say. Expect full recovery. Why? Because they are hoping for the same thing that happened to Silicon Valley Bank. Bail out. Now the question is, how many of these banks are actually in this particular situation, just like Silicon Valley, that we just don't know about it yet? And how many of these banks are going to probably go nuts, just like all these other banks? And how many the Fed are going to be able to support? If you think about it, this is what put us in this position in the first place, like 2020. We all know today's Sunday, tomorrow's Monday, the stock market is going to be open. And when the stock market is open, everybody was expecting crazy, insane volatility on the downturn. Jerome Powell probably did not sleep over the weekend to try and make sure they come up with a better solution, not only before the futures open, but also before the Asian market opens as well. This had to come up. Now, I'm going to tell you the reason why I'm saying no one is talking about this, and this is the reality. This is damage control. This is trying to control the consumer, or this is trying to control everybody to not panic. This is a way to tell people we got things under control. But is it really the truth? Is that really the reality? Because to me, it feels like it's spraying air freshener on poop, hoping it's gonna smell good. No, it's not. We're putting band-aids on leaks all over the places. We're not fixing the problem yet. So, what are the messages getting sent around? You can just have a bank run, and guess what? We'll have money available for everyone who deposited their money. Yes, there's so many companies that were exposed to it. If you look, for example, Silicon Valley had Roku that had over $500 million. You got Circle, $3.3 billion. You have all these other companies. Obviously, these companies have payrolls. They've got to pay people that work for them. So if you got a company going down like that, well, you can't pay anybody, which is why Etsy came out with this statement, right? Etsy warns of merchant payment processing delay due to Silicon Valley Bank collapse. So everybody depends on some of these banks. Okay, now I'm gonna back up a little bit because this is also important. I know a lot of people have been saying, well, these are not really that, they're not really the big banks. They're just, smaller. I'm gonna show you a file. This is a file from the Federal Reserve, right here. Just really quick. Right? You can see it, federalreserve.com. .gov. Start talking about. This file shows the banks, all the commercial banks that we have by asset, how large they are by asset, right? The number one bank in the US, the largest one by asset, JP Morgan Chase, right here, with over $3.2 trillion in domestic asset. It's right here, right? And then you have Bank of America with 2.4, Citibank with 1.76 trillions, and you got Wells Fargo with 1.717 or 1.72, roughly. The four biggest banks, tier one, I would say, right? And then after that, you have US Bank coming down at $585 billion. I think the picture starts to look a little bit clearer. The big guys are in the trillions, four of them. And then right after that, US Bank is at 585 billion. Next, you got PNC Bank, number 6 position, 552, right? And then you got Goldman Sachs in 8th position at 486 billion. But now, if you scroll down just a little bit, this is what you're gonna find. Number 16, Silicon Valley at $209 billion. It is one of the 20 largest companies or banks in the US. Right? Now, I just show you as well Signature Bank that just got closed down. If you scroll down the list to number 29, right here, Signature Bank, 110. So these are banks with hundreds of billions of dollars in assets that literally just fell. So how many in this list, because the list is pretty long, but I'm just showing you a few, how many of them are exposed? There is another bank that I want to bring it up. First Republic. I just talked about it earlier. First Republic says everything is fine, wondering why the market is worried. People were in line trying to withdraw the money out of their account at First Republic. But this is what they did. First Republic get liquidity support from Federal Reserve and JP Morgan Chase. So you have Silicon Valley Bank, you have Signature Bank of New York, and now you have First Republic. All these banks are getting support from the Feds. How many more are going to be coming maybe this week or tomorrow already or in the coming days? Who knows? And how many of these companies or these banks that the Fed are going to sit there and just have facilities of available money to support this? There are cracks all over the places. It doesn't smell good. No matter how much air freshener you put on it, it doesn't smell good. Yes, right now the stock market, if you look at the futures, it's rallying crazy because guess what? Free money again. The Fed is stepping in. Exactly what happened in 2020. Guess where we are with inflation? Boy, oh boy. And now the Fed, because remember, on Tuesday, coming up this Tuesday, the inflation numbers are going to come out. Jerome Powell last week was out there in Congress testifying about how, at least hinting to a 50-point basis point, backpedaling from the 25 basis point they've been doing. With this situation, what would you really expect? And these banks are failing in a fast-paced interest rate increase from the Fed. How many more are still gonna hold up if these interest rates keep going up this fast and this high? How much money will be available for everyone? At some point, some people, some of them will have to go down and get liquidated, like Silvergate got liquidated, right? So the next thing that I want to show you some of the banks that I think are potentially, and this list I'm about to show you is some of the companies that have unrealized losses so far. And you're going to find it very interesting. Watch this. Silvergate is one of them, liquidated, right? If you go back down the list, Signature Bank, with unrealized loss of over almost $2 billion, 1.99, so $2 billion, just got taken over by the Fed, right? Now, watch this. Which other ones that could potentially be in the same position? Fifth Third Bancorp, unrealized losses, $5 billion. Ally Financials, $4 billion. I'm not saying they don't have particular, or they have to have a bank run. I'm not saying they're actually going to fail, but I'm saying that they are positioning themselves just like these other banks that have failed. And so just like when you look at First Republic, they found a way, or at least the Fed is pretty much stepping in JP Morgan Chase. But now here's the crazy part. If these small little banks, or not really small little banks, but if considered quote unquote small, because it's hundreds of billions of dollars, but still, if everybody's starting becoming more scared and try to take their money out and put it in these tier one banks like JP Morgan Chase, Wells Fargo, or Bank of America, or Citibank, then what's going to happen to the rest of the list? You see where I'm going with this? Now, I'm going to go up. I just show you Signature Bank down here. I show you Ally, Fifth Third. And if you keep going up the list, you got Zion at $3 billion. There's a lot of them. But I want to show you SVB, 1.9, almost the same size, right? This is where this is going. And guess what? There's First Republic Bank as well. So you can see a lot of these banks are negative. It's unrealized losses, but still, it's quite a lot. Got 20%. Everybody is over 20%. Everybody. Your bank is probably right here too. But now, this is something else that I want to show you guys that I think it's crazy. $22 trillion in US banking system is only backed by $225 billion by the FDIC. So basically, out of $22 trillion, only $225 billion is insured, and everything else is uninsured. I'm just wondering how long we're really gonna keep doing this thing. How long are we gonna keep holding on, or basically having facilities available for these banks to have enough money for all these companies, and obviously for the people as well? Because as you can see, I shall show you Coinbase in Signature. Think about it this way. The money you get paid, right? It's the money you use for your mortgage payment. It's the money you use for your groceries. It's the money you use for your gas and everything else that you do. Literally. So if they go down, the companies with the money held at the banks that you get your paycheck from go down too, or at least they lose. And guess what happened? I'm not saying this is what's going to happen. I'm just saying it smells fishy. And again, air freshener won't do anything about it. Now, another sign that I think it's worth bringing it up is this right here. Berkshire Hathaway adds to Apple stake, but they pars US Bancorp and BNY Mellon stake. If you scroll down, you will find this. Berkshire Hathaway reduced their shares from 144 million to 144 million shares to 53 million shares in US Bancorp. And they also reduced from 74, almost 75 million shares to only 25 million shares in BNY, Bank of New York, Mellon or Mellon, whatever, but Bank of New York anyway. We all know that Warren Buffett, I know a lot of people say this, but he's one of the greatest investors out there. These are similar moves he's been making for a while. And he has been sitting on over $100 billion in cash, just waiting around, waiting for direction. He's been dumping these banks and holding on to money ready to go back in. So if someone who's been beating the market for decades is dumping some of the banks that he's been holding for years, what message is that sending to you? What is that telling you? So yes, the market can rally. Right now, the futures are crazy. They're going up and up and up. Free moolah. For how long? I'll say we gotta be on the side of the cautious here. We gotta, until direction is clear, it's better you are sitting on the side which is gonna be the one that's gonna win. Meaning you gotta be safe. You need to be sitting on a side where you got something with you. If you're in the market, over leveraging. Just saying. Because this is much bigger than we expect. It's much bigger than we saw it on Friday. It's much bigger than it was when Silvergate and the SVB Bank. Much bigger than that. And so for me to put this in perspective, I think for all of us, at least you gotta be very careful. And I think it's better to be sitting on cash. And it's better to be at least out of the markets and not jump into it really fast because we see the market rallying today. And not only that, liabilities. It's probably time to dump them. It's better to be cautious than to be caught off guard. So that's about it for me, guys. I'll be coming with another update. I'll be digging deeper and deeper in this rabbit hole. And I'm sure there's going to be a lot coming out and a lot of what they're not really telling us about. Let's see if the panic is going to be really, really controlled. Or if everyone is just going to say bye-bye.